The first time I came to Malta was 16 years ago, actually. I just sold my previous business, First Tuesday, which was a network of entrepreneurs, which brought together entrepreneurs and investors from across the continent. And I sold that on the 20th of July, 2000. I came down to Malta. A friend of mine here in town, Andreas Gertis, was having a big event, and I just remembered enjoying the Maltese sun and environment. It was fantastic. Then I came back about a month ago to speak at Finance Malta and was really impressed with the embrace that Malta is making to financial services firms like myself. And then I'm very pleased to be back for ZEST to share with you some of my ideas that power Ariadne Capital. Ariadne Capital is the investment firm I set up 15 years ago. We have done worked with 7 explosive growth companies over the past 15 years, companies that you may have heard of, like Skype, where we were the first people to really, our team basically helped Nicholas Zenstrom and Janice to get a lot of their early business development deals done. We did the first peer-to-peer lending deal in the world, Zopa. We helped a business called Monetize go from idea to £1 billion market capitalization in about 6 years. And we were the first investment firm in Europe to put a group of entrepreneurs at its founding shareholder base and really pioneered the whole entrepreneurs backing entrepreneurs model. Nobody was doing that at an institutional level in 2000. So Ariadne Capital is all about entrepreneurs. We're all about putting entrepreneurs into a circle where they can help other entrepreneurs. But what I'm going to share with you today is about ecosystem economics and how we came to this understanding. What is ecosystem economics? It's a pair of glasses that I'd like you to try on today. It's about how we believe you can predict the winners and why hacking your ecosystem, whether that's the ecosystem of Malta, whether that's the ecosystem of financial services or retail, is the name of the game. If you'd like a copy of these slides, all you need to do is email me or reach out to me later. I'd be happy to share them with you. I wrote about a lot of these ideas in my book, Welcome to Entrepreneur Country, because I feel fundamentally that the world is being recreated by entrepreneurs, that Europe is being redefined by its entrepreneurs, and I hope that you'll reach out and read that book. But the first disclosure I need to make is that I'm really just a girl from Palo Alto. I'm a long way from home. I've lived outside of Palo Alto now for about 28 years, but I am from Palo Alto. And so I know Palo Alto quite well, and Palo Alto does actually 2 things really, really well. For those of you who spent time out there, you know that Palo Alto consistently and systematically creates great companies. There's no question about it. But Palo Alto does something else very well as well, and that is it markets itself. It markets itself that it is the center of the universe for entrepreneurship and innovation and so forth. But here's the thing. This is really the center of entrepreneurship. And that face, I have to admit, is my face too. And for those of you who are entrepreneurs in the audience, it's probably your face too. The more you tell an entrepreneur that they can't do something, the more they won't tell you, but they'll be thinking inside of themselves, you just wait, I'll show you. In the fullness of time, I'll keep going and I'm going to get there. And I'm going to give you 2 good reasons why everybody here, not just in this conference, but everybody in Malta and everybody in Europe, however you define your ecosystem, everybody needs to care about that little guy. And that is because that little guy, the entrepreneur, has always been there. And the power that the entrepreneur has is that he or she takes out a clean sheet of paper and looks at things fresh. They basically ask themselves a very basic question: how should this industry, this sector, et cetera, work? Most people don't do that. If you're an entrepreneur, you may not even recognize that you do that, but you say, how should this work? And what entrepreneurs do is they basically go to the future. They see what is inevitable in their mind's eye. They see the future and advance it, kicking and screaming to the present, and they do that because they're obsessed by what they see, which doesn't exist yet. But the second reason why everybody should be caring about those entrepreneurs is because entrepreneurs are willing to live abnormal lives. We heard a little bit about work-life balance and how people could fill up their lives in different ways by the previous speaker, who is excellent. And I think what I know from working with entrepreneurs for the past 20 years is that they don't think normally about the way they live their lives. And I'll give examples of that a little bit later. And so those 2 reasons are why we have to start the discussion about investing with entrepreneurship. Now, it turns out that entrepreneurs have always been at the center of things. They haven't always been called entrepreneurs. They've been called industrialists or architects or adventurers or artists. But throughout history, capital has always followed ideas. It always has, and it always will. And if you're an entrepreneur starting your business, sometimes you may freak out by the lack of money that you have or the vulnerability that you have in terms of setting up your business. But it's important to realize that people like myself who are in the financial services industry are here today to meet you. And it's about capital following ideas, not the other way around. And throughout history, we see examples of this. It was Christopher Columbus who sailed to the New World. Queen Isabella may have put him on a retainer to have a piece of the upside, but Christopher Columbus discovered the New World. The same thing with Leonardo da Vinci and the Sistine Chapel. It may have been the Medici family who backed him, but the point is the creator, that the ingenuity was in Leonardo da Vinci, Michelangelo, and so forth. So it's important to remember that the financial services industry is just a service industry to industry, that capital follows ideas. It always has, and it always will. Now, quick show of hands. Has anybody read Carlota Perez in the audience? Quick show of hands. Can't see too well, but I don't see too many. So after you read my book, the second book that you're going to read is Carlota Perez's Theory of Disruptive Technology and Adoption. And here's why. It's because it's not just that entrepreneurship is important, but it's important to understand the context in which you are building businesses today, and people like myself are backing your businesses. So I was very fortunate to pick up Carlota Perez about 7-8 years ago through the founder of Zopa, Richard Duval, who very sadly is no longer with us. He died of pancreatic cancer. He was the founder of Egg, and then he had the original concept for peer-to-peer lending, Zopa. And Richard was reading about individual capitalists and freeformers, which is one of Carlota Perez's concepts. But Carlota Perez really talks about the broader period of time that innovation happens. And it's from that we've really built our whole understanding of ecosystem economics. What Carlota Perez did, she's a Venezuelan economist. She was studying oil. She went out to Silicon Valley in 1971. And what she saw there was that the Intel microprocessor exploded into the ecosystem of Silicon Valley in 1971. So she put her study of oil to the side, and she started looking at the impact of this disruptive technology in 1971, the Intel microprocessor. And what she has done in her work is she's looked at the past 300 years. And very helpfully for all of us who read Carlota Perez, she has shown that the same thing happens every 60 to 80 years. There's a moment of disruptive technology, a kind of big bang, whether it's the steam engine, the combustion engine, et cetera, but there's a moment of disruptive technology, and then 60 to 80 years of going through cycles, 4 periods of time until a new common sense emerges. Now, I find that really interesting because I find it very reassuring, actually, because what it means is that I don't need to understand the cosmos. I need to actually read history. I need to understand that the same thing happens every 60 to 80 years. There's not so many new disruptive things, but there's a lot of derivative technologies that come from those disruptive technologies. And then there's a second half of the cycle, which I referred to just a second ago as the Empire Strikes Back, but we're in that second half of the cycle today, where large, non-tech traditional businesses, the socioeconomic institutions, are embracing the derivative technologies. And that's quite important if you're an investor, because it affects the capital efficiency of the investments that you're making. And it's also quite important if you're a founder, part of a management team of a startup, to understand how you're probably going to be going to market. So I'm going to give you 3 versions of the future for you to think about here. The first version of the future is one based in Palo Alto. The first version of the future is that the Facebook, Apple, Amazon, and Google, the digital platform companies, are going to take over the world. And you'd be forgiven for thinking, after everything that you could possibly read in the newspaper and online and all the rest of it, that that's going to happen, that the first version of the future, that they clean up, it's game over for everybody else, that that's the dominant feature. And indeed, I'm constantly amazed at how much these companies are worshipped, not because they're not incredible successes, but they dominate so much of what we can read about and learn about. The second version of the future is that the Airbnbs, the LinkedIns, the Ubers, and so forth, the baby brothers, if you will, but which are also digital platform companies, which are also growing at exponential rates, which are data-driven, network-driven, and so forth, that these companies will take over the future. And again, we see incredible market capitalizations and enterprise values and huge amounts of coverage and dominance and concern in the industry. But I'm here to tell you that there's a more interesting version of the future, and that's the third version of the future, which is that David and Goliath must dance, because 99% of the universe is not in those first two versions of the future. And that's the question I started to ask myself about 7-8 years ago in the depths of the financial crisis. I really said two things to myself. Is it really the case that the one play in the playbook of the typical traditional venture capitalist in Europe is that they're going to back some amazing entrepreneur out of Malta or Helsinki or Munich or London and just really try to figure out which of 25 digital platform companies based in Palo Alto they're going to sell them to? So all of the value goes shifting out to Palo Alto? And is it really that 99% of the universe, the traditional non-tech large enterprises, are just all going to hit the wall and go bankrupt as a result of these digital platform companies, which are growing exponentially and becoming trillion-dollar cash-rich companies, and everybody else goes bankrupt? Well, surely not. And of course not. In every one of those 60 to 80-year cycles that Carlota Perez talks about, there's a certain number of companies that make it to the next paradigm. By no means is it 100%, and who knows if it's 10% or 17 or 20, but there are always a set of companies, by virtue of being natural selection, they are the fittest. They make it to the next wave, to the next paradigm. So how do they do it? And I came to the conclusion that once again, it's the entrepreneur at the heart of society that decides to dance with Goliath. So as a VC, we look at startups and the first question we ask is actually, how are they going to go to market? Because every startup has a customer acquisition problem. Yep, they could do a deal with one of those app stores, but they could also do a deal with every post office or transportation company or bank or retailer. Any large company that has customers could be a highway for that digital car to go down. So the way that I look at things is I see digital cars or startups that are essentially monetization engines. They're enabling tech firms that understand something about a new way to monetize and unlock the value digitally of a customer base. So we're constantly looking at how we can put cars down the highways, and importantly, the driver is the source of all of that consumer insight, is the source of that ability to monetize and use data is better. This is a very straightforward, simple construct, but you'd be surprised at how many times we go in to talk to a large retailer or a traditional non-tech business of some sort who are not entrepreneurs, who are not at conferences like this, and we say basically, Mr. Traditional Large Business Goliath, you need to become a platform. Why? Because the platform companies are making all the money. And if you're going to stay traditional, linear, and so forth, and not be powered by digital enablers, all of those applications that probably many in the audience here are making, you're not going to create any kind of hyper growth. You're not going to actually be competing. So the banks that are still thinking that they're competing with other banks but don't realize that their real competition is in the first version of the future, right, are not going to make it to the next paradigm. So I'm going to share with you a construct that we created a couple years ago called the David and Goliath model. And every company that we have worked with at Ariadne Capital, we can plot on this grid. So I thought I would share with you, because if you're an entrepreneur, you always start in the lower left-hand corner, in the pit of vulnerability, because no matter how many times you've done it, no matter who you are, how much money, you are always vulnerable when you set up a business. But entrepreneurs know things about the future. That's what gives them power. As they start with the clean sheet of paper, they live in the future, and they understand that the world is driven by ecosystem economics, that consumer data is the name of the game, that there's a network orientation to everything. And they work their way across the grid from the lower left-hand side to the upper right-hand corner. And they have to go to market, as I said earlier, and so they're looking for a highway. They could do a deal with an app store based out in Palo Alto, or they could partner with those large non-tech traditional businesses if they know how to embrace the digital Davids. And what do those startups do? What do these digital enablers do? Well, they bring new digital revenues and they bring lean operating systems when David and Goliath dance. But here's the thing, is that so many of those large companies really don't embrace David. They try to keep the startup and the entrepreneurs on life support. And so as a result, the large companies don't become platforms. They don't actually create digital revenue streams. They actually don't make it to the next paradigm. I mean, I remember being on stage in 2003. We had just started working with Nicholas and Janice at Skype, and it was the CEO of a very large telecoms company who was on stage, and when the MC asked me to talk about a company that we were working with, I started to talk about Skype, and I'd probably gotten about 30 seconds into it when the CEO of this large telecoms company said, "You know what, they're going to go bust, you're going to lose your shirt. I've never heard of anything as stupid as what you're describing with Skype." And I sat there for a second, and I said, you know, this is fascinating. You've decided to underestimate the entrepreneurs who disrupted the entire music industry with Kazaa. Can I just tell you, they are so happy that you've decided to underestimate them. You've given them time to get across the grid. And you know, Reid Hoffman, the founder of LinkedIn, has said repeatedly about LinkedIn that if the recruitment firms and the media companies had come together, they could have squashed LinkedIn like a mosquito on the sidewalk. It's because the large companies consistently and systematically underestimate the entrepreneur. They don't remember, or they don't know that face that I showed you at the beginning, the entrepreneur that's going to make it happen. The entrepreneur is consistently and systematically underestimated, which gives him or her time to get across the grid. Every company that we have sold or worked with, we can plot somewhere on this grid. If it's sold for strategic value, it's on the left-hand side, which means that it doesn't get the chance to build a balance sheet. But if it gets really seriously underestimated, it gets to the second half, the right-hand side of the grid, and it builds financial value, and it gets to the point where it has network effects in the industry. Now, I think we're going to continue to see David and Goliath partnerships and acquisitions for the next 10 to 15 years. This is the second half of the Carlota Perez cycle. And so we saw Accor Hotels Group not too long ago acquire One Fine Stay. I think it was for about $245 million, not too shabby in my book, to compete with Airbnb, the second version of the future, right? This is the third version of the future deal, David and Goliath dancing to compete with the second version of the future deal. Now, what really goes on when David and Goliath dance? Well, what happens is actually Goliath, these large companies that are used to looking at market caps and collectivized balance sheets and product groups and so forth, but they don't understand the unit economics of how digital is changing the business model or the transaction. The unit economics is the starting point for everything that needs to go on. Is, do you understand how the transaction is working? The way that consumer data is unlocking value for all of your customers, if you're a banker, a retailer, and so forth. So that's what digital startups do, is they actually help the large companies that they partner with to understand the future business models that are going to work for them. So we think that ecosystem economics, which is our value creation methodology, is the way that we see the world, is this David and Goliath dancing with this input from consumers, is helping companies achieve network asset value, because fundamentally it's all about how we measure success, and financial value and architecture in the future is going to be completely different than it is today. And what we mean by that is, how do we optimize for the system level win? What's that mean? Well, Uber is optimizing for the system level win. Uber is basically determining how much the driver, the passenger, and Uber gets of every transaction. And as a result of creating those clear economics, they're creating a system level platform which is growing exponentially. Uber could decide if they wanted to make sure that drivers were the wealthiest drivers of taxi cabs the world over. But the important thing is that if you're creating wealth, if you're creating a wealthy platform, you can distribute the value effectively. So we believe that all companies, whether they're the digital platform companies which do optimize for the system level win, or the David and Goliath partnerships, the old world coming together with digital startups, need to optimize for the system level win, creating clear economic structures in order to grow. A company in our portfolio called Quill creates content for large retailers. This is not just outsourced content creation. It is actually turning what is a variable cost, yes, into an asset so that retailers can engage that and reuse it and to grow more effectively. This is the business that I've set up to basically help this happen. Ariadne Capital is our investment firm, and I'm really pleased to say that we're looking at setting up our next fund in Malta because of the so many of the embrace and the opportunities that Malta offers investment firms. So we've created an investment firm that has a fund in London that has been working with leading companies, backing European entrepreneurs for 15 years, which is investing in digital enablers, and then we work with large companies on the entrepreneur country side of the business to help them become platforms. And we think it is in this app platform model coming together that Europe can create a win. So we work in different ecosystems that you can see here. These are all of the different market sectors, and we help companies identify their natural allies so that they can understand how to create partnerships which will enable them to win. Natural allies are people that could be previous competitors, they could be partners, but people in whose interest it is for you to be successful. If I want to create the gold standard for the financing of entrepreneurship, I can't do it on my own. I have to ask myself, in whose interest is it for me to be successful? Those are my natural allies. And in a network-based world, it's a function of how you engage with your natural allies. So what do we really mean by ecosystem economics? And give me an example of that working. Well, Elon Musk wants to create the electric car industry. He took out a clean sheet of paper and he created Tesla to drive the electric car industry with that company. What did he do, though? Is he created a series of IP that he then decided to open up in order to get other people to use his IP. And I'm sure he's done that very carefully with the licensing of that. And he's created an open source model to a certain extent. But that's an example of how companies that want to create industries, that want to center themselves at the heart of new industries, use their IP, use their assets to drive the economics, to organize the economics of these new ecosystems. So innovation ultimately is about economics. It's not about technology. Otherwise, we'd all be flying the Concorde. We're not. We're packed into jumbo jets. And ecosystem economics firms achieve network asset value by optimizing for the system level win. Now, a final point is about data, and this is what I think is the big opportunity for Europe, the judo move, the game changer compared to the first and second version of the future. The digital platform firms out of Palo Alto are basically using our data and giving us no economic or financial upside for it. This is a quote from almost 20 years ago by John Hagel, who said it's inevitable that individuals will own their own data, and still today, it's not the case. One of the things that we're doing in Entrepreneur Country, if you go to entrepreneurcountry.com, you'll have an opportunity to become a citizen. Inside of Entrepreneur Country, we have established property rights for individuals to own their data. Why? Because it is the main driver for all of the future of these ecosystems in the digital economy. Our personal transactional ability should be such that we participate in the upside. If you look at, and it's a fascinating exercise to do, to read the annual reports of Amazon, Facebook, Apple, and Google, you see massive goodwill on the balance sheets that I would argue is actually an aggregation of the value which should be attributed to individuals but has not been dealt with in an appropriate technological way. We're testing that hypothesis in Entrepreneur Country, that this will unlock and unleash massive value in our community as individuals decide to test, pilot, and to be profiled in exchange for a piece of the upside for the use of their data. So a couple of concluding thoughts. Goliaths don't need to be tied down like Gulliver. They need to engage with entrepreneurs. They need to unlock the value of individual data. Ecosystem economics firms achieve network asset value by optimizing for the system level win. I encourage you not to go to Palo Alto, but to go to Entrepreneur Country. And I thank you very much for being a great audience. And if you'd like to meet with me, I'll be here all day. If you'd like a copy of the slides, just send me an email or reach out to me. Thank you so much.